Yeah, no, I don't disagree one iota.
Yeah, that was a really good low, matching the pivot in the bonds.
Very good.
Yeah, Ira, this is Pete. What do you think about
Who's
I
that?
kind of got a sense that the institutions
Who's
are
that,
losing.
Peter?
Yeah, it's Pete. Yeah.
Hi, Pete.
Hi. You know, I've just had a sense this past week. I think that the Navarro thing kind of added to it was just a sense that the institutions are really kind of losing their control of the markets. And I think their control is really called what the markets are. And and now here's gold ready to break out per Judd. And it tried to this morning. And I'm sure it'll try again. What do you think?
You know, we kind of talked about it a little yesterday. I'd actually like to see gold do exactly this, grind sideways, and let the currencies. I told Judge, today's an interesting day in the currencies. The currencies could reestablish the recent strength that they had, and it close higher and it close above those pivots. Those pivots have really been great trading. I mean, I liquidated 80% of my longs yesterday. I still had some because the trade's been and I will not really establish the full position back until I get a real confirmation across the board. And again, here's a classic case how the currencies are trading. If I would have said to you that the S&Ps were down 85 handles, how many people in this room would have told me that the yen would be 30, 40, 50 higher?
Yeah, we all would have.
Right?
Yeah. Oh, yeah.
Now they're trading together. This is what I wanted to see. Now it may all end here. You know, we talked about that yesterday. I said, hey, that pivot has proven very effective. And if you don't lock up with it and respect it, I think it provides, again, quality trading areas. But I want to see, you know, I've been trying to, if it wasn't 105 degrees out already, I'd be out running, but it's a little too hot. When I've been trying to get away from the screens, I have some stops in. If the currency starts to rally, I'll buy on strength. This is not where you know, some people would say, well, if you really like the position, you should be buying on weakness. I kind of let the market show me more than I'm going to show the market. Actually had a nice trade.
I think the economically sensitive stocks are starting to look like they're head and shoulders and they're done and they're going down. I don't know.
Give me an example.
Well, they're equal weighted S&P, RSP, which instead of cap weighted, it's if you look at RSP.
Okay.
Look at it on the weekly, Peter.
Yeah.
It's went right down to 200 week again.
Well, look how far that is off the high.
Oh, yeah.
That's a point well taken, and you're at the 200 week. Yeah, as Judge said. I mean, yeah. Listen. You know, the fundamental drive in this market, of course, is the Fed, and that the Fed will be there, come hell or high water. And not only that, you not only have the Fed there, you have the White House there, because you saw it the other night when Navarro set the market up on that break, and then all of a sudden Trump's tweeting, and Trump's tweet takes the market all back. So I mean, it's terrible to have a White House so cognizant of what the equity market is doing. Really, it shows you what a lack of thought. Because if the market, it becomes a tautology. Because if the markets are going up because of ultra low interest rates combined with massive fiscal and monetary stimulus, then it just becomes, a total feedback loop, really more than a tautology.
Sure.
It's a feedback loop, and one feeds the other. And then when things start, then the White House comes, oh yeah, da 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 da. So what are you going to come out with today? Because their eye is on it, and it's terrible. Your eye should not be on it. Your eye should be if they could absolutely get an infrastructure bill out, it would be a major impetus to some of the stocks that we're talking about. It's why the only stocks I'm buying are mining and agricultural stocks, trying to build for the success of the Fed to create inflation. That's right. I'll miss others, but I'm invested in some funds that will catch those. Not in any big way. It's so minuscule. It's not even 2 or 3% of my net. It's small. But my own personal trading account where I trade stocks, I'm building that because I'm going to say the Fed's going to be successful. And Judd, wait till you hear the modeling interview. I'm not making it one of my better ones, to tell you the truth. I think it wasn't as much to talk about as when I'm involved with others, but it will be interesting.
Well, did you listen to our conversation yesterday?
Did I? Yes.
That was good.
Very well done, by the way. So, if people would take the time, there's so much here. As again, I've been taking the time going to YouTube and scrolling through a lot of old stuff that's in the archives. And it's amazing if you really will take the time and don't treat this as a hobby, but as the effort and due diligence that it takes. There's a lot of opportunity to learn and to put this into action. How much leverage you use, that's your call. That's really where we sit. So again, I'm really, and more people are seeing it, but again, I come back to the currency because the bonds, again, the European bonds are a great trade. The U.S. Treasury and interest markets is terrible. Here, look at the movement in the bond markets today with an 80 handle break, right?
Yeah, hold on. Let me throw
the 10s are up 2 ticks.
Yeah, it was crazy. And it's the 30-year that went right up to its number and stopped again.
Yeah, this is the Fed. The Fed has absolute control. In fact, there was a piece out, I think it was a Wall Street Journal piece, in which they quoted, what's his name? The great perma bear, Edwards, from Euro, Albert Edwards. And he made a great comment about that yield curve control for the BOJ has been far too successful because there's no bond trade. And with no bond trade, you can't get the currency down anymore. There's no bonds to buy. So they can't, and is that going to be a result of, I don't think so, because I don't think the Fed is anywhere near the BOJ, and the Fed will not stop. Again, I was reading one comment after another, the banks are going to be pulling back, how can they pull back? The Fed has put itself and everybody else on notice that it's got yeoman's work to do to get this unemployment situation rectified. So there's no exit. Now, will they be in buying as aggressively? No. And if you put in yield curve control, and that's Albert Edwards' point, is if you put it in, a lot of times you don't even have to do the buying because the market has to respect and fear you. Something we've talked about, which is why I really haven't made a trade in the curves because of that. Going back, now it's probably 9 weeks from that one weekend with Lael Brainerd, and she was out all over the place talking about yield curve control. And I said, I'm just not playing here. They're going to crush it until, and yet, we've gotten some movement, but again, it's a trade. It's not a position you could win on because if they come in aggressively, and they're not going to necessarily tell you, although for a while they were telling you how they were going to do this, but now they're buying corporates. And look at the look at the high yield TLT spread, which is a good place to keep your focus on, by the way. I think that spread is going to gain an ascendance, especially as the Fed is going to get more and more involved in the corporate bond market.
Yeah, and the tips have totally rolled over here today.
Yeah, I know. Again, it's an area I should.
I got a pretty good profit in tips that I put on like a week ago.
That's good.
I'm going to hang on to them because I see inflation, somewhat persisting and but the economy not.
And you know what? A lot of people are going to be chasing them now because they're on a lot of people's radar screens where they weren't before. But they're still out there. there is a vibrant discussion. I read one this morning about, the inflation deflation. Where was that at?
Stan, are you still around?
Yeah.
Okay, when Ira's done, I'm gonna throw up that chart. You can explain it.
Here.
I'm
gonna-
done.
I'm
I'm done. If I find a piece, I'll tell you I'm done.
I'll tell you what, I'm just going to share some numbers for you quick. Some estimates I'm looking at. Third quarter, quarter over quarter, GDP growth up 27%. Fourth quarter GDP growth down 0.4%. Inflation going to be up about 0.6% each of those quarters. That's some forward estimates I'm looking at. So the fourth quarter, year over year, third quarter year over year down 6% year over year. Fourth quarter down 6.5% year over year. GDP.
Yeah.
So it's not like relaunching according to that forward-looking estimate. But it's not forward look, but it still has some. It still has a annual inflation rate of I don't know 1%.
Yeah. And the outcome of that is because there's all these people pushing the deflation argument, and for the life of me, why do you think that the Fed is going to, if their whole goal is to get out in front of it, there's going to be no limit. So you have high unemployment and low inflation. That's going to be all, that's going to be the green light to fire on all cylinders.
Yep. Very deeply structural situation. It's very predictable now for a while.
Right. Yeah, that's right. That's right.
Hey, Ira, how long do you think before?
Oh, you finally woke up, Angela. Go ahead.
I'm just listening, but there's lots of crapola swirling around in my head. How much longer before you think the Fed and the Bank of Japan, since they don't have any bonds to buy, take a page straight out of the Swissy playbook, the Swiss National Bank playbook?
You know what? If I was Powell, I would be buying foreign bonds. Now, of course, you're going to run right smack into the Federal Reserve Act 13.3 as to what they can buy. But that's where you get. Listen, the Japanese have been doing it, by the way. That's when they really got the yen moving lower, beginning in 2012, 2013. Don't forget that the Japanese have huge pension funds that they basically act. They won't say it like this, but they almost become government entities. So when you have Bank Chukin, and you have that huge government pension, but they start buying foreign assets. So they're buying foreign bonds because they're looking for yield. The United States, yes, we have investors who do that, but it has not been a principle of the government. And I wrote a blog about 6 or 7 weeks ago that if the Fed was smart, they would mimic what the Swiss National Bank has done. Right?
And there's no, go ahead.
No, yeah, continue. I'm sorry.
All right, and I was going to say, and there's one other thing that really bothers me about the issuance of debt. We know that there's an imaginary line in the sand where excessive debt becomes deflationary. What I'm trying to figure out and what I'm going to be looking for is, does there come a day where there's another imaginary line in the sand where the excessive debt issuance that would historically be deflationary suddenly becomes inflationary? Do we travel down that kind of perdition's path where we start getting, the expected outcomes?
That is, to me, that's the end game.
Yeah.
That path. First of all, it's only deflationary if you accept the theory of Ricardian equivalence, is that people save more money knowing that there's all this debt to be paid back, right? Which we saw actually for those last 2 months.
Exactly. That's the big question mark.
Yeah, it's classic. People have denied the existence of Ricardian equivalence, but I would argue that it's actually And people should read Richard Kuh's book if you really want to understand it. That came out in 2008.
The balance sheet recession,
Yeah, balance sheet.
or the other one.
It's the holy grail of macroeconomics, but it's the same thing. That's what he really writes a lot about balance sheet recessions, and it's the same as Keynes's paradox of thrift. And you saw it, right? And they were pissed because the savings rate went up dramatically. Okay, and yesterday Vox came out with a very interesting article talking about how the very wealthy, and they used it by zip codes, had decreased their spending dramatically. And they showed it. And spending had actually gone up as a percentage, of course, in the lower income zip codes. Very interesting map. It was put out by Vox. Worth taking a look at. So these things are real. This is not, these are probably some of the better, I think, pieces of economic theory. So you make this is a very good point, and you have to weigh it in there. And well, that's why some people are forecasting a deflationary spiral. I'm not denying that. My point is that the banks have promised you that they're going to do all they can to prevent that inflationary spiral. So adios, and that's to me why gold goes up. And the conversation I have with Malvin, it's interesting in regards to that. Actually, he says
because I know that everybody likes to use the Weimar Republic, money printing and a wheelbarrow full of cash to buy, but that was a different world in the sense that Germany, what were they exporting back then? We're in a much more globalized economy today than I think we were, back in the teens, right?
No, I would actually disagree. The global economy was very buoyant. Of course, don't forget, it was the British Navy that protected the sea lanes. So you had global capitalism, and the gold standard was the medium of exchange for it, right? So it was dominant. In fact, I would accept the Marxist argument and neo-Marxist that World War I really was a result of Britain and some of the other European powers trying to keep Germany out. That Germany was becoming a dominant player and wanted access. But don't forget, Germany didn't have colonies, because Germany doesn't become a unified nation until they destroyed the French in 1871 in the Franco-Prussian War, and then you get the unification of the German republics by Bismarck. So, and 44 or 43 years later, you have World War I. So the Germans were trying to break out. They were trying to break out to Eastern Europe, and the French were using the Russians to, again, bottle the Germans up, because the Germans really had no colonies. So they had no places to export. What's his name? The journalist whose theory of imperialism is actually quite good. Oh God, am I old? I can't face it. Not Lenin, not Schumpeter, but Hobson? Yeah, Hobson. So that the ability to export your excess production to the colonies was a big part of the global capitalist system, and what was made colonialism so important. So the fact that Germany didn't have that, and they were vying for markets, really set the table for what took place in 1914. So I would disagree with that. That the world.
I guess what I'm driving at is today. We have China and all of the emerging market economies that are the big exporters today, and does that maybe stretch out these deflationary pressures a little bit longer than we think they will? But it's all the same path.
Yes, but you're right. But see, if China slows down its exports, which is taking place, by the way, so you're getting that And again, that was the problem if the yuan devalued, I'm going back to when, all those big hedge fund guys back in 2016 were pushing a yuan devaluation of major proportions. And I said, and I was on with Santelli, and I said, well, if that happens, all I'm going to do is get long gold and long bonds. I don't have to be short the yuan and play against the Chinese government, because the deflationary impact from that would be massive, because the Chinese would be forced into a massive amount of exports, pushing prices down on a global scale. And then the central banks will have to get into action to prevent the deflation from taking place. Bonds will rally. And you know what? That's exactly what happened. That's exactly what happened. So your point is dead right on. But right now, the Chinese, because of the structural changes going on in some of the global supply chains, they're not as dynamic, and they're being more careful. It's not that, and they're doing a lot more to try to shore up their domestic economy. This is what Michael Pettis has talked about, the importance of it. So shifting from a export-oriented economy to a more domestic consumption economy. So there are little bits and pieces of this. But Angela, you bring up that good point, and that's about, because that takes you to the Phillips curve. So as much as we talk about the deflation, the pressure on global wages was not only the fact that global money was chasing cheap labor, the huge amount of capacity built in those places was curbing any ability for wage increases in the developed world. And that's, to me, why the Phillips curve stopped being relevant, especially after 1989. I never gave it much credence, even when I was a graduate student. I didn't like it. I saw various flaws in it. So in the way my thinking, and I think in the global terms, and the Phillips curve does not have a global orientation. So why should I measure just its impact on domestic wages when money can flow around arbitraging away that differential anyway and keeping pressure on wages? So why should my interest rates respond only on a domestic basis? So until they incorporated some type of global nature to wages, I had no time for it. I thought it was a waste of time to study, to rely on the Phillips curve.
Ira, can you see the comments in the chat?
No, I can't see
Here.
it.
So Bosco, I'm just going to read you a couple of them then. This is a big difference since 1920s in dollar is world's reserve now. And then Robert just typed in, Germany had only Cameroon, Gabon, and part of, or Cameroon, Gabon, and part of Congo colonies between 1884 and 1960.
Yeah, shit to nobody. They didn't have India. They didn't have Latin America.
Yeah, they picked the rotten ones. They did not get much out of it.
No, there was nothing. In the Congo, of course, you had the wonderful Belgium under King Leopold, who slaughtered, I mean, it's estimated up to 5 to 10 million people who lived in the Congo in their effort to grow rubber. That was the Belgians, who are busy telling everybody how wonderful their history is. Kiss my ass, that's why I love that statue. That statue should turn around and piss on the Belgian people as far as for the damage they did to the Congo. Everybody has short-term memories. But Robert, that's right. And when they wanted to break out in Eastern Europe, they ran right into the Russian Empire. So, and the Brits controlled the seas, and it was a tough rule for the Germans, and the Germans were really equivalent basically to the Chinese when you really think about it. Because they were really trying to push out. So, those are all important points, and thanks for that.
All right, so Ira, can you see can you see my screen or not? Or are you just on your phone?
Let me go. I'm seeing the chat. Okay, I see Robert's comments. I see Bosco, alchemy at its best. Platinum's, that was, okay, Platinum. What else? I don't see anything else.
Okay, so I just put up this yield curve thing that
Oh, good. This will be the last thing. And then,
Stan, go ahead and
Okay.
tell Lara what the deal is here.
Yeah, well, this is from Broker Tech data. We can also get it from NASDAQ. The black is the yield curve today. That's
Okay.
2s, 3s, 5s, 7s, 10s, and bonds.
Okay.
And then you can pick any time frame you want. The red one is 1 month ago. The blue one is 2 months ago. This was 6 months ago.
Okay.
One on top. So, I mean, it basically shows you the curve. It shows you what the changes are. Just another way of looking at the yields and the yield spreads.
Right. Right. Pretty dormant though, right?
Yeah, yeah. A couple months ago when this thing started, of course, it was inverted. We were below,
Right.
as you went out, you got lower.
Mhm.
Now it's interesting, for example, on the blue one, which is 2 months, that, we see an increase in yield on the 30 and you see a reversal from where we are now. You see the short terms going down and the
Yeah.
30s are going up. So you see a changing in at least the shape of the curve.
Well, yeah, and that's who did this? Who's talking? I'm sorry.
Stan.
Stan, this is a beautiful chart. And when you absolutely catch something that's very important. In fact, it's making its way into some of the discussions, not here yet. Because, they are, and I think we talked about this, Judd, in this room, about the Treasury hoard of about $1.5 trillion, and everybody's wondering why are they sitting on so much cash?
Right.
This is, now with Mnuchin saying, well, they might put off the July 15th tax date. Did you hear that? Because we're trying to.
Yeah, that was out this morning because they got what, 300 billion in extra.
They got so much more, but they're so afraid, so there's going to be the hit to federal government revenues, let alone state revenues is a different topic we'll discuss another time, but we've discussed it already somewhat. But the White House, meaning the Treasury, is afraid that if they don't have enough cash, that's why they're flooding it with bills, and the Fed is buying it. They could wind up in a budget discussion going into the election in September and October, and that's the last thing they want. So they're trying to keep enough cash on hand so they don't have to get bogged down with it. That's my sense of why that is. As I say, I could be wrong about that, but it seems what they're logically trying to do. And I expect that the Treasury balance sheet, it's now about 3 times its usual size because they always need cash on hand. But I expect it to grow. And that'll put more pressure because they'll be selling more and more in the short end. It's all in the short end. So that's why we have seen some steepening, as we've talked about. But that steepening gets capped because of the fear of the yield curve control. And that's really what you're seeing here. So Stan, this is really good.
What else you can do if you have these feeds on your machine is you can link it up, cursor to a chart, and you can put the cursor on any bar that you want, and it'll show you what the yield curve was at that point.
Well, I'm such an old guy, and I've used CQG for 40 years.
Yeah.
But you're going to have to give me a tutorial one day.
My pleasure, anytime.
Okay. All right. I will call you, and you'll enlighten me, and I mean that truly, because I know I have this powerful instrument. I'm comfortable. I basically use it the same way I've used it. It's a sad story, but Judd sends me stuff. People send me stuff so I can get away with it, or as my kids would tell you, I'm a technological parasite. I plead guilty.
I always said that's why we have kids, so somebody can fix our computers.
Yes, believe me. They grew tired of it and they all moved out. I got nobody. My wife who absolutely knows how to do it all. I'm on all fours begging.
Nothing was funnier than yesterday. Rob was an Intel exec running a 200-person team, and his daughter comes in and tells him he doesn't know what he's doing with his computer.
Yeah, smart ass. But Dad, can I have 100 go to the mall? Oh, that's right. I know. It's actually, I've always laughed, and I was glad when my kids were 10 years old that they could teach me how everything worked. My daughter was a year and a half old. This is true, Lizzie, and she had to teach me how to use the VCR. All right, if that's it, see, these are good. I like coming in. And usually I'll give you more heads up. I'm going to go do a Cordelli.
Okay, well.
All right, so thanks. You guys have enlightened me as usual. I get as much as I give. So anything else, just pass the questions on, and I'm answering in real time. And again, I'm watching this. I'm watching these currency markets, and it really intrigues me that with the S&Ps, getting hit pretty good today, that the yen didn't go higher. Just like it didn't go lower the previous 2 days when the S&Ps were trading significantly on a rally. So interesting. And all that says to me is we're starting to see some long-held correlations begin to break down, which is the time of markets I love. So very selfishly, I watch it. So I'm giving you what I'm looking at and what I'm thinking about. And again, those pivots we talked about yesterday, really, the 200 week in the dollar index, which really set up very well at the 200 week in the euro, proved very, very good points of some profit taking. And let's see what happens from there.
All right. Thanks, Ira.
Okay. All right. Thank you for the time.
See ya.
All right. Bye-bye.
Thank you.